Hi, everyone. Well, it looks like stocks might be off to the races. Our market models across the board switched to a buy signal yesterday, and today we had complete follow through. Volume wasn't above average on the S&P 500 in New York Stock Exchange, but still volume was heavier than the session before. Overall, it looks good. We're breaking out to new highs. S&P 500 looks good. NASDAQ, look at that volume surge today. We're breaking out to new highs and volume well above average. Tell you what, it's not perfect out there. I have, once again, zero hot charts. It's just utterly stunning. Zero hot charts, just, full of accumulation, full of solid price uptrending, and full of max green bop or green bop. They're just not out there. But the market looks great, and all this looks great. But what I kind of like a little bit more, and what I'm focused on, is the oscillators. We're looking at the Russell 2000, which is breaking above its like cup with handle formation here, breaking out. Volume was also heavier on the Russell 2000, not shown here obviously. The key thing is to look though at all of our oscillators. Look at MACD trending higher. Look at TSV trending higher. Look at stochastics trending higher. Look at Wilder's RSI trending higher. And if you'll notice, none of these are in the overbought range. Now, whenever we look at the NASDAQ, we can see that stochastics is touching the overbought range, but they're all trending higher. And like we learned last time we got into the overbought range, we can continue up higher and just stay overbought. So right now we're not quite there yet, which suggests that we could see a lot more upside in the short term for stock prices. Same can be said also in the S&P 500. All of the oscillators are clearly uptrending. Everything looks good. I tell you what, when you got all four oscillators on every single index confirming price move that's breaking out to new highs, you've got no reason to try to top call this market or not be long this market. If you're not fully invested now, there's a lot of stocks I got bolded on my new positions page. You can go check those out. But for our end, we're basically fully invested, and I guess that's good news because tonight I only have one new long position I want to take, and that's in Melly. Melly is a can slim quality stock that's bouncing through basically off its 50-day moving average and through it on above average volume, producing a pocket pivot point signal. Melly has earnings, I believe, on the 23rd. So we're going to want to see Melly perform immediately, but even if it doesn't, as long as it doesn't cut through the low a day of this today's signal date, it probably end up gapping up because the market path of least resistance is now clearly up. But Melly is also a pre-perfect speculator scan stock. If Melly breaks out past the 137 level to new highs, it will become a perfect speculator scan stock, and right now only 42 stocks out of 10,000 in the stock market qualify. So Melly is a new long, being can slim. That's a 2.5% position. With it being a pre-perfect speculator scan stock, that's another 2.5. So 5% into Melly. On my cash account, I can't do that. Why can't I do that? Because I also have an ad in a stock we're already long. UEIC is a high-quality can slim stock, and it's in the actual perfect speculator scan stock and has been in the perfect speculator scan since November. So this is a high quality long position. Half of the, since we're already long, we no matter what have to half any kind of new long signal. So 1.25% for can slim scan, 1.25% for the perfect speculator scan. Neither one of these had enough volume surge to add anything else, but once again, the cash account, I can't do anything with that, so it doesn't go back on. And then also putting back on a trade, HVB. HVB was a new long here. Intraday, it actually hit one of my stops. What was it, 25.51? Or no, it was here. It was this day. So 25.50 would have been my first stop. And it hit that on the 10th and completely reversed. And the rule is if it can close above 25.95, it's a new long position. Boom, closed above it off the 50-day, another volume surge. So I want to put back on some of that trade. But by having this trade, UEIC and Melly, and also ABAX, basically I wanted to go ahead and put it on a buy stop above the 59.61 level. But with it bouncing right off the 50-day moving average here, I can actually get long here and then have less risk if it closes below the 50-day moving average. But I got shaken out of most of my ABACs back here on this day on 2-4 by having super tight stops. And since then, it's attempted to move higher, but then it looked like it was going to roll over and all was good. But now it looks like it's bouncing. So I want to put a little bit of that ABAX back on in my cash account, margin account. Everything's fine. And I want to also put HVB back on. And then I also want to go long Melly 5%, and then UEIC add 2.5%. And then for sells tonight, Wi-Fi is the speculative position. This is a 50% sell signal here. I'm already out of 50% of it, so what I'm going to do is I'm going to put my first sell stop right below the 810 level, so 809. So tonight I'm not going to sell any of it. I've already sold 50%. Technically it's a 75% sell position now, but I'll wait for it to close under 810 before getting down to 75%. And then my next stop is actually my break-even point, which I think is like 797, 798. I'm not sure. I don't have my I do have it up, but I'm not going to go pull it up. And then FRGI is closing below the 10-day moving average on extremely heavy volume. Technically, now that we're under a buy signal, this is not a sell signal either. However, technically, if we were under a neutral or sell signal, it would be. So it's a 25% sell signal. However, my 25% sell will only go off if it closes below 61.92. Or not closes, if it trades below 61.92. So if it opens up tomorrow at 62.13 and runs for the rest of the day, I won't be selling off 25% of FRGI. So 61.91, my sell stop. All right, everyone, let's see what happens on Friday. We're looking good.